Hello traders, John at StockBookie.com. Today we're looking at Goldman Sachs and JPM on the daily, weekly time frames using technical analysis here at StockBookie.com. If you like these videos, go to my website, sign up, or click down here in the bottom right hand corner and subscribe to my YouTube channel. Alright guys, so earnings coming up with banks on Friday, so that's going to be a big wild card for these. JPM is after the fact, not this Friday, I think the following week. But if you look at JPM, you have the high, lower high, lower high, lower high. So you're in a little bit of a downtrend. You do have the 200 above the 50, above the 20, excuse me. So that's a little bit on a weaker stance as well. But you're coming off the bottom. You had a nice shoot up, nice little gap up. I believe that was earnings. And then boom, comes to this 382 retrace and then pretty much halts, guys. Pretty much chopping around. I believe probably waiting on the Fed, what they're going to do with the rates and all the other news that's going on right now. So it's pretty much stalling out. But not a bad bullish consolidation. A little choppy, sloppy in this pattern, or range, I should say. But if you look at the weekly, you can see it a little bit better. Up, sideways, trying to get through this big resistance, guys. Now, we're waiting on earnings. This thing could pop up and go. Bulls, you got to get above the 212 to 215. Then I think you can make a run for this 220 to 230-ish area or this overhead consolidation here. But first, you got to get above this trend line, all right? So that's the bullish case, guys. Get above all the moving averages on the weekly and then make a run for the money on ER. Okay, 50-50 shot like always, guys, like the casino. But, you know, you got to be aware of what's going on, the news, the Brexit, the China trade, all that good stuff. But why are the financials just stalling out the last couple of weeks while the markets keep grinding higher? So that's something to keep in the back of your mind as well. Stance here, little bit weaker below the MAs, above the 20, but still up, sideways. Bulls, got to get above the MAs, 220 or 215, 220, then you can make a run. Bears, if this thing stays here, starts getting weaker, earnings, you break this, you break. I'm going to say, well, you got to get through 200 first, then 190, gap fill here. But if you come past this 186 area, the low end of this channel, you're going to start filling gaps on the way down. Daily chart, you can see a little bit better. So if we cannot make it above, and even 209, you got 213 up here. You got some real good resistance. But if it could pop through there, you're going for the 225, 220, 230-ish area. If this pattern fails, you get below the MAs, start filling gaps. Again, the 286 or the 186 area, you're definitely going to fill this gap, fill this gap, fill this gap, go back to double bottom. So right now we're kind of in that 50-50 shot, guys. Earnings will drive this thing. If it drives it up, great. Trail the stops if you're bullish. If this thing plops on earnings, comes back down, we'll either short it or we're going to be looking for areas to bounce and go long. You know, so it's one of those things. I don't care long or short, guys. Just looking for specific areas to short it, going for specific areas to go long. If this didn't have earnings coming up, this is a great pattern to pop. Okay, as long as it holds this 186 area. All right, we're only at 202, so it's not that big of a stop. If you wanted to go long here, guys, great. But knowing that 50-50 shot going into earnings, we could drop, we could pop. But we'll see what happens with JPM on Friday. See if we get above these key areas. Let's go into JPM. Now JPM, Friday's earnings, guys. Same thing like GS, goes up, kind of chopping around. This one's a little more choppy, sloppy, but we're back above the MAs, the 50 and the 20, and a little bit more of a bullish stance. But bottom line for JPM, guys, and this one too, 25 cents, down a little bit. Almost 10 million shares traded, 0.24% red on the day. Big trend line right here. You see it better on the weekly. So every time this thing looks like it's about to pop up, right here, look at that, just holding it. Gets above it, never follow through. Come back in, nice pop here, back to the highs, right back down, guys. Pop, slop, retrace, and then dump. I'm surprised we didn't hit the 200 MA. Just like the DIA, just like the Qs, this will come back and kiss this eventually, guys. It's just a matter of time. We haven't hit the 200 MA in a long, long time, other than 216. All right, and then we did it when? In 212. So 12, 13, 14, 15, 16, 17, 18, 19. Will it do that? So every 4 years, maybe. Maybe it does hit it towards the end of the year. Trying to look for symmetry in these markets as well. But inside bar, a little bit better stance above the 20 and the 200. But still, I mean, why isn't everything else is up here? Okay, if we take this retrace, bring it to the highs. The indexes, this one's at the 5-0 retrace, guys. Okay, everything else here, all the indexes are up here. Why isn't JPM one of the leaders leading this market? Apple too, ExxonMobil as well. So this one though, chopping and slopping, trying to get above these highs, guys. A lot of overhead resistance. They're going to need earnings to pop this thing up. The bullish case, you got to get above this 110 area, guys, 111. And then make a run for the 112 high pivot. This is where we broke down. If you cannot get above this 112.49-ish area, you're going to have problems making new highs. All right, they're going to have to gap it up, guys. That's the bottom line. They're going to have to get on new. They're going to have to grind it higher all week, get it right to these trend lines, have good earnings, and then pop this thing up. If it does not do that, if it does not grind and we run into bad earnings, here's your area, guys, the 98, 100. That's got to hold. And then gap fill here around the 101.26. If that does not hold and this thing starts to slide, we will be testing double bottom and on the weekly time frame going back to the 200 MA. There we could bounce. We'll have to line it up with the IWM, the Qs, and everything else, but that's what we're looking for. And you have a lower pivot down here too as well. So that's something that you have to keep on your radar. But we have not hit this 200 MA, and it's almost time, guys. And just being weak. You're not even above the 50% retrace on here. All right, guys, so the moral of the story is we're going into earnings on banks coming up. 50-50 shot with this. If you want to go long, great. Just make sure if you get below this 100 area, if it does start to sink, that you could definitely come back down here to double bottom. If you get above these areas here, boom, we can make the run for the roses, go for the 120 area. Yeah, 50-50 shot right now. Let's see what the markets give us this week. Even on Monday, let's see if some news drives this thing or some volume comes in. That would be nice. But if it stays complacent, no volume going into Friday, we'll probably just grind. And then this will probably just chop up and down, guys. All right, that's going to be it for these two. Keep an eye on these certain areas. Keep an eye on the earnings, the Brexit, the China trade, all that good stuff. And then we'll see what we get this week. All right, guys, thanks for stopping by. I really do appreciate it. God bless. See you on the charts.